For the 6 years, what is the return on investment? So that is ROI it is given. We need to calculate the standard deviation. So your x minus x bar it is 16 divided by n, which is 6. So it's equal to 1.633 is the standard deviation. Company B has a higher risk profile with a higher coefficient of variation. Hello dear student, welcome to the session. My name is Kopamdi, faculty in the Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. So we are discussing Advanced Financial Management of 6th semester BCom. So in the second unit, that is Risk Analysis and Capital Budgeting. So in the previous sessions, we are discussing what are the techniques that are available to measure the risk profile and also the expected return of any project. So in the today's session, we will discuss the standard deviation. So that is problems on calculating the standard deviations and coefficient of variation. So here, using the standard deviation and coefficient of variations, we are finding what is the risk involved in the project. So here in the questions you will given with the period and also the return on investment, and by considering all those things, by using the standard deviations and coefficient of variation, we will find out what is the risk involved in the project. So here also we will solve the problems. So first problem, the return on investment achieved by MRF Limited over the past 6 years is given below. So here for the 6 years, what is the return on investment? So that is ROI it is given. We need to calculate the standard deviation. So here your standard deviation, your formula, it is root of sigma p into x minus x bar whole square divided by n. So this is the formula that we have. So here we have given with the period and ROI. So this ROI we consider it as a x. So here in the problem you have in the formula you have P. So that means it is the probability. So here in the questions we don't have probability. So we'll calculate what is root of sigma x minus x bar whole square divided by n. So that is what we'll consider here. We'll exclude this P because here in the questions we don't have the probability given. So we'll take sigma x minus x bar whole square divided by n. So here ROI is x and your x bar, so that is arithmetic mean. So how to find out the x bar? It is sigma x divided by n, we will get x bar. So this is the formula that we need to apply. So see the solution part. So you will have period from 1 to 6 years, then ROI it is given 12, 16, 13, 12, 14 and 11. So whatever the ROI is given here, the same we will write here. So that is considered as x. So then we need to do x minus x bar. So here it is x minus x bar. So here first we'll find out what is x bar. So as I said earlier, your x bar is equal to sigma x divided by n. So that is the formula we use to find out the x bar. So what is the x bar here? X bar means it is your sigma x. So that is total of ROI. So your sigma x is 78. So that is 12 plus 16 plus 13 plus 12 plus 14 plus 11, which is 78. So your sigma x is 78. So now we'll find out x bar. So that is 78 sigma x. So your sigma x is 78. Then we need n. N means it is number of times or number of items. So here we have from 1 to 6 years. So your n it is 6. So 78 divided by 6. So your x bar it is 13. So now we'll have to do one more thing, that is x minus x bar. So here x is your ROI. X bar that we have found it is 13. So we need to do x minus x bar. So first 12 minus 13, it is minus 1. Then 16 minus 13, it is 3. 13 minus 13 is 0. Then 12 minus 13, it is minus 1. 14 minus 13, it is 1. 11 minus 13, which is minus 2. So now we got x minus x bar. So now we need to do x minus x bar whole square. This is x minus x bar whole square. So this we need to find out the square. So minus 1 into minus 1, you will get 1. Then 3 into 3, it is 9. 0 into 0, it is 0 only. Then minus 1 into minus 1, it is 1. Minus 1 into 1, it is 1. Minus 2 into minus 2, it is 4. So now we got what is sigma x minus x bar whole square, which is 16. X minus x bar whole square, which is 16. So now this will apply it in the standard deviation formula. So your standard deviation formula it is, so the root of sigma p into x minus x bar, it is square, it is divided by n. So here in this question we don't have P, that means it is the probability is not given in your question. So your standard deviation formula, it is root of sigma x minus x bar whole square divided by n. So your x minus x bar, it is 16 divided by n, which is 6. So it's equal to 1.633 is the standard deviation. So here simple, when you're given with the probability, so here after x minus x bar, you need one more, that is p into x minus x bar whole square. So when you have to, then you have to multiply your probability with x minus x bar whole square. So here we don't have that probability. So your formula, it is sigma x minus x bar whole square divided by n. So your sigma x minus x bar square, it is 16 divided by n, it is 6. So the whole square and you take off the root, it is 1.633 is the standard deviation. So now we'll see the second question. When the two companies ROI it is given, how to calculate the standard deviation. See the question, the return on investment of two companies is given below. Using the coefficient of variation, so here important, they are asked to calculate coefficient of variation, determine which company has higher risk profile. So that means we need to find out what is coefficient of variation. Right. So your formula to calculate coefficient of variation, so that is your standard deviation divided by arithmetic mean. So that is what we have given, we have discussed in the previous session. Your coefficient of variation, it is standard deviation divided by arithmetic mean. So that means what? First we need to find out what is standard deviation. So your standard deviation is sigma p into x minus x bar square divided by n. So this is the formula that we have to calculate the standard deviation. So in the question we have here, we have ROI of two companies, but we don't have probability, that is P. So that means here we don't need to consider this P. So that your formula becomes sigma x minus x bar whole square divided by n. So that is the whole root we need to take. So the whole root of sigma x minus x bar square divided by n. So that is the formula we'll apply to calculate the standard deviation. So now you will have here 2015, 16, 17, 18 and 19. Then ROI of company A. So this is X of company A, 13, 16, 14, 15 and 12. So then we have ROI of company B, that is also X of B. So that is your 16, 12, 18, 14 and 15. So this is the question we have. From this questions we need to find out what is the coefficient of variation. See the question solution part. So the first will in the single table will calculate for both company A and company B. So here first we'll write the year 2015 to 2019. First then we'll calculate for company A. So company A, your X. So that means it is the ROI of A. So whatever you have the values here, 13, 16, 14, 15 and 12, the same value you will take here. So then we'll find out what is sigma X. So because we need to find out what is X bar, right? So X bar means your sigma X divided by N. So your sigma X, it is 70. So number of items 1, 2, 3, 4, 5. So the N, it is 5. So first we'll find out for company A what is arithmetic mean. That is X bar is equal to sigma X divided by N. So that is equal to your sigma X here, it is 70 divided by N, which is 5 number of items. So X bar, it is 14. So first we'll find out for company A what is arithmetic mean, that is X bar, so which is 14. So now we come back to the table. So now we'll find out what is X minus X bar. So your X bar here, it is 14. X we have, it is ROI. So now we'll do X minus X bar. So that is 13 minus 14, it is minus 1. Then 16 minus 14, it is 2. Then 14 minus 14, it is 0. Then 15 minus 14, it is 1. Then 12 minus 14, it is minus 2. So now we got what is X minus X bar. So now we'll do the square. So that is X minus X bar whole square. So we need to multiply this one. So minus 1 into minus 1, it is 1. So then 2 into 2, it is 4. 0 into 0, it is 0. Then 1 into 1, it is 1. Then minus 2 into minus 2, it is 4. So this we have, it is sigma X minus X bar square, it is 10. So now we can easily find out the standard deviation. Here if we has the, or if the probability is given, now one more column you will add, that is P into X minus X bar square. So here we don't have P, so we'll take this itself, that is X sigma X minus X bar square. So now we'll apply the standard deviation. So your formula, root of sigma P into X minus X bar square divided by N. So here, see the sigma X minus X square, X bar square, it is 10. So 10 divided by N. N, it is number of items. You have 5 years, so the number of years, it is 5. So 10 divided by 5. See here, 10 divided by 5. So it is root of 2. If you take out the root, your answer, it is standard deviation of company A, it is 1.414. So that means your standard deviation, that is sigma X minus X bar square, that is 10 divided by N, it is 5. So 10 divided by 5, it is 2. So if you take out the root, so you will get the standard deviation 1.414. So now finally we need to find out what is CV, that is coefficient of variation, your standard deviation divided by X bar into 100. So we have X bar here, which is 14, and your standard deviations that we have, it is 1.414 into 100. So your CV, that is coefficient of variation, it is 10.1. So that means your standard deviation that we have found out, 1.414 divided by arithmetic mean, that is X bar, which is 14, into 100. So your CV, it is 10.1. So this is the coefficient of variation for project of retake for company A. So now we'll calculate in the same table, we'll move to the company B. So this is the company's B's calculations. So same year, 5 years you have, and you will take the ROI. So that is company B's ROI. See your question. Company B's ROI, you have 16, 12, 18, 14 and 15. So that 16, 12, 18, 14, 15. So this is the company X ROI. Then you will do the total. So this is sigma X is 75. So now we'll find out what is X minus X bar. So that means what? For company B, we need X bar. So the X bar is how much? Your sigma X divided by n. So your sigma x, it is 75 divided by n, number of items or number of years, it is 5. So your x bar. So now we'll find the arithmetic mean for company B. See here, sigma x, which is 75 divided by number of years, that is n. 5 here, 75 divided by 5, so your x bar, it is 15. So now we'll do the x minus x bar. See your table, x minus x bar. So your x bar, it is 15. So 16 minus 15, it is 1. Then 12 minus 15, it is minus 3. Then 18 minus 15, it is 3. 14 minus 15, it is minus 1. 15 minus 15, it is 0. So now we'll find out x minus x bar square. So we'll find out the square of this one. So 1 into 1, it is 1. Minus 3 into minus 3, it is 9. Then 3 into 3, it is 9. Minus 1 into minus 1, it is 1. 0 into 0, it is 2. So now we have what is sigma x minus x bar square. So we'll do the total. So 9 plus 1, 10. 19 plus 1, it is 20. So your x minus x bar square, it is 20. So now that 20 we'll use to calculate the standard deviation. So here also your formula for standard deviation, it is root of sigma p into x minus x bar square divided by n. So here we don't have p. So we'll just take what is sigma x minus x bar square. So that is 20. See here we have calculated, that is 20 divided by n. So that is 5. So 20 divided by 5, it is your root, it is root of 4. So if you take out the root of 4, so your standard deviation, it is 2. So here 20 divided by 5, so that is your root of 4. So if you take out the root, so answer will be 2. So that is your standard deviation. So now the same standard deviation, by using that we'll find out what is CV. So that is S, your standard deviation, divided by x bar into 100. So your standard deviation we have found out there, it is 2 divided by your x bar, which is 15 into 100. So your CV of company B, it is 13.33 is your CV. So now you have company A. So your CV of company A, see here, it is 10.1 and company B that we have, it is 13.33. So we'll write the conclusion here. Company B has a higher risk profile with a higher coefficient of variation. So that means by comparing A and B, B's CV, it is high. So that means by using the CV, we'll find out the risk profile. So by comparing these two, companies B's CV, it is higher. So that's why its risk profile is high, and companies A, so the risk profile, it is low, which is 10.1. So this is how we need to find out the coefficient of variation. So your CV, calculate this your CV, your formula, it is your standard deviation divided by x bar into 100. So that means what? We need to find out the standard deviation, which is your root of sigma p into x minus x bar square divided by n. So usually in this questions we don't have the probability, that is p. So that's why we'll calculate what is x minus x bar divided by n. So your x bar, it is simple, your total of x, that is sigma x divided by n, we will get the x bar. So this is how we need to find out the CV and standard deviation. So this is all about the today's session, and in the next session we are going to discuss about the sensitivity analysis and also how to calculate the range under sensitivity analysis. So that is we'll discuss in the next session. So this is all about the today's sessions. I hope you all understood the calculation of coefficient of variations, and we will meet in the next session. Thank you.